Excel accounting practice problem. Credit memo with inventory transaction. Get ready, because we're about to excel with Excel. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, 2 tabs on down below, example and practice. Example tab in essence being an answer key. In prior presentations, we put this worksheet together from a blank sheet, which is a good exercise if you want to go through that process. This time, we're using this sheet to record the transaction related to a credit memo involving inventory. So we're going to look at the forms on down below. First, we'll enter the invoice. Then we'll take a look at the credit memo in terms of the transactions that in essence would be supporting the forms. So the invoice form, as we've seen in prior presentations, will increase the accounts receivable by the invoice. The other side then increasing sales by the amount that we charge. The difference going to sales tax if we have sales tax, which we're likely to have in the United States if we're selling inventory. Then we're also going to have the inventory going down by an amount that is not, the sales tax payable will go up as well by the 775. Then we'll also have the inventory going down by an amount that's not on the invoice, but driven by the item in the invoice. Other side then going to the cost of goods sold. Then if we think about a return of the inventory, we would have a credit memo type of situation, which in essence would reverse the transaction. However, possibly we would want to make one little tweak to that, not reversing the sales line item, but instead putting it to another account called, we're going to say this time, sales returns and allowances. That could be a little bit of a twist or tricky situation with the use of the items in the credit memo, which you could get more detail on looking at like a QuickBooks course on how to do that with these inventory items. But that's going to be the general idea, and we're going to look at that from a journal entry standpoint at this point. So first, we're going to imagine we put the invoice on the books first. And so we're going to do this a little bit more quickly because we've seen this in the past. The transaction related to it, we're selling inventory on account, have not yet received the cash, invoice in essence going out. On 4/15, we're going to say accounts receivable would go up. We also are going to have the sales tax payable that's going to be involved in this transaction, which is going to be here, sales tax payable. And then we're going to have then the sales price down below as well, which is the 200, hold on a second, sales dollar amount or sales account here, sales account. So first I want to think about what we charge. This would be, of course, be determined by the sales item on the invoice. I'm going to try to pull this information from our subledger, noting that the subledger generally tracks the cost, which we could use to then calculate the sales price in QuickBooks or some kind of software. It will typically have the sales price generated, or that would be input as part of the process for the items that would be used. So I'm going to say equals and go all the way to the right. And I'm looking at this subledger for inventory. I'm assuming we're selling inventory item 2. And I'm going to take the cost, which is 25 times 15. I'm assuming we sell 15 units of it. And so that would give us then the cost of the 375. Then I'm going to mark it up, and I'm going to assume we mark it up 30%. So I'm going to go back in there and say I'm going to take that amount and then multiply it times 1.3, 130%. So multiply it times 1.3, and that'll give us our 488. Then I want to make this a negative number. I'm going to double click on it again, just put a negative in front of one of these items. And so we got the negative 488. I'm going to assume that's the sales price. We're going to have to pay sales tax on it, and that's going to be determined by the state. I'm going to say it's 8% here. So I'm going to say this equals the 488 times 0.08%. We're going to have to pay another $39. That means we're going to charge the client or the customer the 527, which I'll put here with the negative sum or plug formula, as I call it, negative SUM of these items down below. That'll give us the 527, the sum of these adding up to 0, or in other words, debits equaling the credits. Then we'll pick up the amount for the decrease in the inventory and the cost of the goods that we're selling, cost of goods sold on the debit side, because it is in essence an expense. inventory going down on the credit side. Same calculation for the cost of goods sold, pulling that in from our subledger way over here. I'm just going to pick up, and you could type this in. You don't have to do the formula like this, but I'm just trying to tie out where it's coming from. 25 times 15 units we sold at $25. And then I'm going to say that's the debit and credit here. Let's do some indentation here and here. Alignment, indent, and then indent the credit down below. There's our transaction related to the invoice. Let's record it first to the trial balance. Here's the accounts receivable. I'm going to record that here. And the accounts receivable equals that 527, bringing it up from 2,000 up by the 527 to the 2527, out of balance on down below. Next, the sales tax going up by 39. Here's the sales tax payable. We're in cell H12. This equals then pointing to that 39, bringing the sales tax up to 39. Finally, the revenue then going up by the 488. Revenue on down below, we are in H15 equals, we're going to pick up that 488. That then puts us back in balance with the green zeros, the net income calculated as the revenue minus the expenses, that being income, not a loss. 24,710 increases by the sales amount, the 488 to the 25,9 or 198. Recording the second side or half of the transaction. The sales or cost of goods sold down below equals the 375. That has an impact on the net income. So the net impact on income is 113, net increase to net income, given the fact that sales went up, but so did the expenses, the cost of the thing that we sold. And then we've got the inventory going down. Inventory going down by that 375, bringing the inventory down to the 4,000. Let's go ahead and record this out onto the general ledger now. I'm going to highlight the first half, making it green so I can focus my eyeballs on it. So here's going to be the accounts receivable. That's the third account down. The GL in the same order. So we're going to go over to the AR accounts receivable. 415, I'm in cell P17. I'm going to say equals, left arrow till I hit the wall, up to the accounts receivable, the 527, bringing it up from 2,000 up by 527 to 2527. That's the same amount on the trial balance. We're out of balance on the general ledger. So we're going to then go to the sales tax payable. That's the last liability account, same ordering in the GL. Assets in green, liabilities in orange. There's the last one on the liabilities. Date 415. We're in cell AB17 equals, left arrow till you hit the wall. Scrolling on up to then the sales tax payable at the $39. It goes up to $39. That $39 also on the TB trial balance, still out of balance on the GL. We're then going to the revenue account. That's the first income statement account. Same order on the GL. Assets in green, liabilities in orange, equity in blue. The revenue way out over here in AI5 on the 415. We're in AJ5 equals, left arrow all the way over, head of steam, hit the wall, boom. The whole Excel shakes. And then we're going to pick up that 488. And so we brought it up from 200,000 by 488 to 200,488. Now we're going to be back in balance on the GL, but we're not matching what's on the trial balance with regards to net income. And that 200,488 matches what's on the TB. Let's record the second half. I'm going to ungreenify this one. Ungreenify or bluify it, however you like to think about it. Ungreening or bluifying. And then we're going to go to this one, cost of goods sold. That's going to be like the second income statement account. Same order on the GL. Assets in green, liabilities in orange, dark blue equity. And then the income statement, we're down here in AI17. We're on 415 as of the date. AJ17 equals, left arrow hitting the wall, boom. Scrolling back up, and then we're going to say 375, 375. So we got the 160 up by the 375 to the 160, 375. That then should tie out to what's on the TB. It does. We're out of balance on the GL. Let's record the last one, inventory. That's going to be the fourth account in the assets in green, fourth account. There we go. We're going to go 415, and then in T5 equals left till you hit the wall. I'm going to burst through that wall one of these times. I'm going to burst right through it. That's what I'm going to do. In any case, we got the 4375 down by the 375, credit to the 4,000. That puts us back in balance on the GL. That same amount is on the TB as well. So that is that. Now, let's go to the subsidiary ledgers for accounts receivable, because we got to break that out by customer now. So that's all the way to the right, the sub-ledge for AR. Down here, we're going to say this is customer 4. This is customer 4 on 415. And we're going to say then on BD17, I'm going to get ahead of steam, equals, I'm bursting through that wall. Left arrow, boom. That's a hard wall. That's a tough wall. I'll get it one of these times. I'm going right through that wall. 375, 375. That's the wrong number. Hold on a second. Here we go. Let's try it again. We're picking up the accounts receivable. Accounts receivable, the 527. You could just type it in there. You could just say that you're on equal C2. And then if you add up the 4 items on the customers, it adds up to the 2,527, matching the TB given by the green 0 here. So the 2527, 2527 on the TB. Is that what we have? We do have that indeed. We got to do the same thing for the inventory now. Inventory needs a subledger, breaking it out by the stuff that we sold. So let's go all the way over to the inventory subledge. Way over here, we're going to assume we sold item 2. These are our 2 inventory items now. We sold item 2 this time. So I'm going to say we sold down here in the subledge 420. And we're not going to get into too much detail on how the flow assumptions work, but you're using either specific identification, first in, first out, FIFO, last in, first out, LIFO, or weighted average, which is the default for QuickBooks Desktop generally. QuickBooks Online will typically use FIFO as the default. So we're going to say that we sold 15 units at 25, and that's going to be the 15 times 25. That's where we got to that 375 on the decrease in cost of goods sold and the inventory. That leaves us left then. I'm going to subtract this out, the 15 at the 25. This is going to be equal to the 15 times 25. Let's put an underline here and there. I held control down to highlight 2 non-adjacents, font group, underline, and then we're going to subtract this out. This equals the 75 minus the 15. This equals the 1875 minus the 375. So that means we have equals the 1500 divided by the 60, 25 units. So we have 60 units left at $25, which of course it is the same 25 no matter what flow assumption we use, because we haven't had any changes in the dollar amounts of the cost of them. And therefore that 60 times the 25 gets us to that 1,500 for the inventory unit 2, plus the 2,500 for inventory unit 1, adds up to the 4,000 total in dollar amount, ties out to the TB given the fact that we have the green 0. But let's double check it. Going back to the left to the TB and the GL, tying it back out again, looks perfecto, just like Mundo would do it. And Mundo's a perfectionist. Perfecto Mundo, that's what I call him, because he does everything perfect. So now we're going to say on 420, we're going to reverse this. Now this is going to be the credit memo transaction, kind of that would be this form down below, which would tie out to the invoice. You can kind of think of the invoice linking to it. We're going to be reversing it, assuming at this point that the account receivable had not yet been paid back, returned the inventory, and so now we're going to have to reverse this whole transaction up top. When you do this transaction, you got to consider, did we get paid or not at this point in time? If they paid us, then we got to give them money back or some kind of store credit. If they hadn't paid us, Then we got to reverse the receivable. We also have to consider the inventory. Are they giving the inventory back? And is it worth anything? Do I need to put it back on the books or not at that point in time? We're gonna assume it is. We put it back on the books. So that means that we're going to just reverse this whole thing. Now, note that this is where people get messed up. Another place they get messed up. First, they try to think about the credit memo without first thinking about the first invoice entry, which is a mistake because most people can't just imagine the credit memo on its own without first imagining the invoice. Write down the transaction for the invoice and then reverse it. Second, they try to basically reverse what happened up top by then putting the debits on tops and the credits on the bottom, because traditionally that's the way debits and credits are supposed to go, but that's just a convention. It's not really what you have to do. So what you want to do is just reverse this thing exactly. That's the easiest thing to do. So I'm just going to take it from top to bottom. The credits and debits will look funny. It'll also look funny just because it's backwards. The whole thing is backwards because the credit memo is unnatural. It's going in reverse order to what normally should happen. But this is the easiest way to do it. So I'm going to say this equals the accounts receivable, and that's a credit. So I'm going to indent it and then just reverse this whole thing. I'm going to say negative of that 527. It's on the credit side. But the credit's on top. You can't do that. You can totally do that. You can do that. People get mad at you. If you want to rework it later, then rework it later. But you know, you can do that. So then we're going to say the sales tax payable is going to be a debit, negative of that 39. And then we're going to say that the sales or revenue here is going to be a negative. You could use the plug function, or you could say negative of that 488, negative sum plug function of that. There's the 488. And then on the cost of goods sold, I'm going to say this is the cost of goods sold, but this is the credit on top again. You can't put the credit on top. You totally can. You totally can. Do it just to piss people off, just to anger people. Here we go. It'll still work. It'll still work. So there we go. So now that you've reversed it that way, if you want to rewrite it so that it looks kind of nicer to have the debits on top, then you can rewrite it basically down below, and that'll take you a lot less time than either trying to imagine this in your head without first doing the first entry, or trying to imagine how to do it, putting the debits on top just for formatting's sake. For formatting's sake. Do it the easy way for formatting's sake. So in any case, we'll reformat it in a second. Let's record this first. So I'm going to then reverse this. Let's make this green so we can do that easy like. Putting our eye right to where we want to go. Here's the accounts receivable. We're going to go right here. There's something in it. This is going to reverse it. And there is going to be one kind of twist to this one. That's going to be the sales. Let's look at that now. That sales account, I'll start to post it, and then I'll get to that in a second. So I'm going to double click on the accounts receivable, go to the end of it, say plus, and then we're going to point to that 527, reversing it, taking it back down to the original point because we reversed it out. The sales tax is going to reverse out right here, double clicking on it, going to say plus, and then go to that 39, reversing it out. And then we could post this one here, reversing the sales. And that's what you would do. That's what a credit memo would do down here if we didn't do something special to it, which we might want to do, because maybe I don't want to reverse sales. It's unnatural for sales to go down. Maybe I want to record it in some other account, such as sales returns and allowances. So let's imagine that we do want to record it in another account. So I would like to, this is the one tweak we want to make. I'm going to change this to sales returns and allowances, which I probably misspelled. Did I misspell it? Did I misspell it at all? No, spell check says it's okay. If it's good enough for spell check, it's good enough for me. So I'm going to put this right under here and add a new account. So we'll get into some formatting issues here. So it's because we've been building this worksheet as we go. So I'm going to try to build this worksheet in here, meaning I got to add an account here and then put it on the GL as well. So I'm going to select the ones below it and insert above. So I'm going to right click on those items, insert, and I want to push these cells down. Notice I didn't select the whole row because I don't want to mess up everything to the right and left of it, but there's nothing below it. So I'm going to say shift those cells down, There we have it. I'm going to call that sales returns and allowances. I'm going to copy this, paste just the name, start it out at 0, and then sum it up equals the SUM. And there we have it. The sales returns and allowances is in essence a contra sales account. So it's going to be kind of like a net sales. We'll get to another net sales. We're breaking out a contra sales account in a similar way as the relationship between the fixed assets and the accumulated depreciation. So we're going to then say this is going to be equal to the sales being reversed. So it's always going to go up in the debit direction, and the net of those is kind of the net sales in essence of the 200,000 reversing back out to the 200,000. The cost of goods sold, double clicking it, plus we're going to be picking up that 375, reversing it out, and that's kind of an unnatural thing to do as well. The cost of goods sold is going down, and then inventory is going back up. Assuming we got the inventory back, assuming it's still good, we're going to put it back on the books for the inventory, which can be somewhat confusing with regards to our inventory tracking and so on. But inventory back on the books for the 200, for the 2,000, that puts us back in balance down below. Let's record it out now. Let's record it to the GL, noting that we're going to have to add this account as we go. So we'll do that. That'll be fun. That'll be fun. Let's go to the accounts receivable first. That's going to be the third account on over. The third account is the AR, otherwise known as the accounts receivable. We're saying this happened on 4/20. 4/20. This is going to be equals, and P8 equals, we're picking up then that 527, reversing it back down, 2,000 going up by the 527 to the 2527, going down by the 527 back down to the 2,000, taking us out of balance on the GL. Secondly, sales tax payable, which is the last liability account. We got in the GL assets in green, liabilities in orange, last liability on 4/20. I'm in cell AB18. AB18, we're going to say equals left to the wall, picking up then that 39, reversing the 39. So it went up and then it went back down because we reversed it with the credit memo, back down to 0, just like it shows on the good old TB trial balance. Now we're going to do the sales returns and allowances. We got to add a new GL to do that. How do we do that? That seems like really complicated. Let's try it out. We're going to add a new GL. It's going to be over here. We want it somewhere, like we want it to be like right there. So what I'm going to do is add a whole another couple columns here. So I'm going to say this is how many columns? 1, 2, 3, 4, 5. So I'm going to add 1, 2, 3, 4. We'll just add those. I'm going to right click and insert. And then I want to non-format these by hitting a little paintbrush. I want to say clear that formatting because I want to do my own formatting. And then we're going to copy these cells and just copy that over. Copy and paste it, pasting it. So there we have it. And I added one too many columns. So I'm going to delete this one. Right click and delete. So there we have that. And then I want this one. So this one down below shouldn't have any numbers in it. And I want this one to move up there. And then I want this one down there. So what I'm going to do is move this. I'm going to cut this. I'm going to select this, Control X, cutting it. And I'm going to paste it right there. Control V, pasting it. And then this blank one, I'm going to grab that and Control X that one. And then Control V it right there. And this is our new one right there. And then I'll leave this hole. I'm going to leave the hole for now. I'll just leave that. So then this is going to be equal to the sales returns and allowances. There we have that. And then the beginning balance is 0. This happened on 4/20. This is going to be increased. Increased equals the 4/20s going up by that 488, which would put us back in balance now on the general ledger, except that that new thing isn't in our totals over here. So I got to add it. So I'm going to double click here with this huge formula, and I'm going to add that last cell right there. I'm going to add that one by saying plus And then we're going to add that one here. That should put us in balance. Going to do the same thing to this one. This formula right there. I'm going to say plus, and then we're going to add that last one. So this one will already be done on your worksheet. But if you're just building the worksheet as you go, you can see how you can kind of adjust this worksheet, hopefully, as you go. Hold on a second. Okay, the second one's still off until we record the second part of our transaction. So I'm going to ungreenify this top part. I'm going to keep that one yellow because that's going to remind me, hopefully, that I do have to adjust some other things, including the financial statements. The cost of goods sold then is going to be the third income statement account. So we got assets, then liabilities, income statement accounts. We're looking for the cost of goods sold here on AM6. This happened on 4/20. This is going to be equal to an AN6 equals left to the wall, hitting the wall. We're going to that cost of goods sold, the 375, and enter. So there we have it going back down, back on over to the left-hand side. The inventory then is going to be our fourth asset account. Scrolling on over to the inventory on 4/20 equals left to the wall, picking up the inventory at that 375 and enter. So the inventory has been reversed. Let's do this to the accounts receivable on the subledger now. So now we got to go all the way to the subledger for accounts receivable because we hit accounts receivable. This particular customer needs to go back down. This would be done automatically in QuickBooks because the credit memo would force us to give them the customer information as we enter it in BH18 left or equals till we hit the wall. I'm going through it. I'm going through it this time. Boom. Dang it. So this is going to be then accounts receivable going back down 527. Goes up, goes back down. Adding up the four customers still adds up to the 2,000, matches the TB given by the green 0. And then we got the subledger too for the inventory because we got the inventory back again, all the way back to the subledger for inventory. And so now we've got inventory. It wasn't really a purchase, but it's kind of like a purchase. So I'm going to do it in the purchase area here and say on this last one happened on 4/15, not 4/20. Now it's 4/20. Now it's 4/20. So let's put it right. Let's put it right here on 4/20. We're going to say now we've got 15 units at 25. At 25, so this equals the 15 times 25 that are back. So that's going to be ending inventory 15 units at 25. That's the 375. So if I add this back up, we got the 60 plus the 15. And we had then the 1,005 plus the 375. This equals the 1,875 divided by the 75 or the 25. We're back to where we started. Putting some underlines here. I know I did that quickly, but we're going kind of long. We're just basically getting back to where we started. My main point being here that the subledger needs to track the inventory, which would be done in the computer system with the help and use of the items if used properly. We're back at the 1,875 down below for item 2, 2,500, item 1, adding up to the 4,375 for the both of them, tying out to the TB given the green zeros. So if we go back on over, there we have that. Notice that you might recalculate this or might rewrite this with the debits on top once you have done that, just to see what that would look like. You could just say, all right, what if I just rewrote this with the sales on top? That would be the 488. Sales tax payable then is going to be the 39. We got the accounts receivable would be the credit, which I'm going to do with the negative sum or plug formula. And then you can put your credits on the bottom. And then you can just reverse then this one as well, saying that the inventory is going to be the debit, the credit being cost of goods sold. And then you got it looking more proper with the debits on top, but not doing that first because it'll be more confusing to do that first, but rather doing that later just so you can make people happy so you don't upset people's with having a credit on top. Okay, so then we can then take a look at the financials. We're going to have to add this one account to the financial because we added that account. So I'm going to hide everything till we get to the financials so I can add that, putting my cursor on column J, going all the way on over to the right till we get to the financial statements. There's our balance sheet. It's out of balance. Right click and hide all that stuff. And then on the income statement over here, we got to add an account. So I'm going to say we need an account. We need another account over here. So we could add it. It's really kind of a net revenue account. So let's add 2 lines up top and adjust it thusly. I'm going to select two things or 2 sets of rows in there, those cells, and then insert and shift those cells down. This will already be done for you on your worksheet, but just to show you how you could do it, or if you're building this worksheet from scratch, if you're following along with this from scratch, then we're going to have the sales returns and allowances, which is going to be equal to the sales returns and allowances, which are kind of contra sales accounts. And then this is going to be equal to the amount of the sales returns and allowances of the 488. And then we might call this net sales, not net income, but net sales. And then this would be equal to the 488 minus the 488. You might have one more row that you would add. Insert another shifting down, which would be called, and then I'm going to format it like the one below it. And I'm going to call this one net sales. We're going to calculate, bringing that to the left-hand side, and then formatting this one over, underlining here, put in some brackets around it. I know I'm doing this quick, but just to give you an idea how you could format this. And so there we have it. And then down below, we'd have to recalculate the net income, which is going to be equal then, or we have to recalculate the gross profit, which would be equal to the 200 minus the 160. That then brings us to the 24,710, matching the 24,710 on the TB, 24,710, and that puts us back in balance on the balance sheet. So then, once you did the credit memo in like a software, you'd probably then go to your balance sheet and check something like the AR possibly, and say, there's my AR, it's back to 2,000, that looks right. I'm going to unhide my cells from I to CD, right-click, unhide. You might say, let me drill down on that to like a transaction detailed report. I think I hid instead of unhide. I'm going to unhide. Unhide. That's what I want to do. So let's go back to my transaction detailed report for accounts receivable, and you get something like this. Would be like a GL. You could say, all right, there's the activity. That looks right, but I want to see it by customer now. So then you might go, okay, now I need a sub ledger, which would be like an AR accounts receivable, like detail report or summary or aging. You could say, okay, yeah, that looks good. What happened to my inventory sub ledger? You can then look at your inventory sub ledger, which would be like an inventory summary type of report or something like that.